Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So today in the weekly report we have tried to dig the recent events deeper, try and take a look at the fundamental moments, on the economical moments, geopolitical moments, and explain why Fed, by our opinion, should have really big problem to normalize situation in the United States. It's because it has only single tool to make impact on the economy, which is interest rate, but the factors that could bring some problems stands significantly wider and not limited just by the monetary factors, but also some structural factors in the economy and geopolitical factors as well. So by our opinion, initially all investors will try to use well-known cliche that suggests rising of the interest rate somewhere should lead to the rising of the domestic currency. And this pattern should work for some time, particularly in this year and maybe in the first half of the next year. But after that, it should be clear that Fed is enabled to struggle the negative moments in the economy with just changing their interest rate. And there are lots of reasons for that. So once the United States intends to struggle with the inflation, they simultaneously stimulate this process, stimulate domestic inflation by sabotaging shipping of the goods from the China, making delivery artificially expensive. And in fact, you can't simultaneously trying to fight the fire and add the fuel. So this is a simple moment. There are different sub-product of this process that you see currently inside United States economy. Also some geopolitical problems now is becoming more evident. So I put some links on a report so you could read it. And that just makes us to expect maybe in the nearest few months, indeed, United States dollar should climb higher on the background of demand for safe haven, on the background on faster interest rate rising, which should make more attractive investing in the United States. But later, in the beginning of the next year, or closer to the summer of 2023, it probably should be evident some problems with this strategy. But anyway, currently, we still stand with our previous view that euro currency should keep dropping in the nearest time. By the CFTC report, you could see the massive closing of the long positions this week. And that makes the background for a current pullback really fragile. So it just makes us think and confirms our view that current action is just temporal pullback. And within the couple of weeks, we probably should get the downside continuation. In fact, on daily chart, this market shows relatively solid upward swings. So you can see here and here. So market keep chances to proceed higher to the OP target and complete the 1230. In fact, the completion of 1230 is also desirable is because it's unfilled gap. So if you take a look here, we have unclosed gap, and with reaching OP market usually should try to complete it and close around 2030. That's why we do not deny the idea that market could complete this ABCD pattern, reaching the OP, form guardians cheaper to sell before downward action will be reestablished. But whether market will go to this target or not depends on how it will react in the beginning of the week on the strong support areas that we have. Because at this point, markets tend to the resistance. So in fact, it hits the first 618 level here for hitting the COP, reaching of the daily overbought. And this combination suggests that at least minor pullback should start, and actually it's already stands underway. And depending on how market responds to the levels that we have here, support levels, should give us the answer whether we will get upward continuation or not. Particularly speaking, we need to keep an eye on the two levels. First is the 109.30, which is the agreement with the OP. So this ABCD pattern that stands here. So for example, guys, probably it should be clear that if market here shows some upward action a bit higher, then you need to adjust the C point, moving this higher, and that simultaneously should change the placement of the targets. So this target stands up with the swings that we have already in place, but don't forget to adjust it if the structure will change a bit. By current view, it seems that OP is most important level, but in reality, our primary level right here is just because this is agreement with the 110 area. We have confluence and COP agreement, and this level seems more important than this one. So normally, if market indeed stands bullish, it should hold above this area and keep going higher right from this level. This will be kind of the second chance level, but if market will not be able to stay at the confluence, what the chances that just single level will be able to hold it? So this level definitely will be weaker than this one, and chances on upward reversal also will be not as strong as in this level. So this is the primary level to keep an eye on. The market will be able to stay above it, start upward action up from here, then the chances that it will hit the OP also should stay. Market holds these chances. So if you're considering taking the long position, that's the level that probably makes sense to keep an eye on.